billion-dollar trading strategy. How much would you pay for a trading strategy? $1 million, $1 billion, $1,000. You've been on those courses. In the 30 years that I've been trading, I've seen so many different trading strategies. I've seen trading strategies to die for. Amazing trading strategies. And do you know what? Nobody's paid anything. At the end of the day, people go on courses and they spend thousands of dollars for these billion-dollar trading strategies, for these amazing trading strategies that seemingly make so much money. But the strategy that I'm going to show you today, and the high probability system that I'm going to show you in the charts shortly, is used by the richest pros in the world, by the biggest companies in the world, by people who make billions out of trading, which is why it's called a billion-dollar trading strategy, because clearly at the end of the day people can make loads of money out of it. But it's all about how you approach your trading, and it's all about how you understand the markets. The pros are not interested in the squiggly lines. They're not interested in little candles going up and down and such like. The pros are looking for liquidity. They're looking for your money in the markets. They're looking for where you left that stop loss, for where you left that order for them to take, for that money. And that's what you should be looking for. You should be looking for that liquidity in the markets. That's what's important at the end of the day. Not the squiggly lines and the little candles going up and down, and it's red and it's green and it's got tails on it, and this candle depicts that's what's going to happen next. And no, that's not how it works, guys. That's why trading is a 50-50 game. At the end of the day, the stock market, the Forex market, the commodities market, the whatever market is made up of buyers and it's made up of sellers. And every single buyer in the market is trying to take a high probability trade with a high probability value at the end of the day. In other words, he's looking to make a profit somewhere down the line, or she's looking for some way to make a profit somewhere down the line, not a loss. I don't know any traders who get into the market to make a loss, or any investors who invest in anything with the idea that the investment's going to lose value. The idea is for the investment to gain value. But it's a 50-50 game. And the only way to make a profit in a game like this is to have an escape plan. To have a plan, an out, if things go against you. And that's the simplicity of it. And I'm going to show you that after we've looked at the charts, after we've looked at the high probability systems, the billion-dollar trading system that will actually help you to make money in the markets and actually help you to really become profitable. So many of you out there have spent thousands of dollars on courses and nobody's told you that it's a 50-50 game. I'll bet you right now, I'll really bet you that everyone's told you that you've got a 80% chance of winning or a 90% chance of winning if you use their system. If you buy this course and you do this course and you pass this course, you're going to have a 90% win rate, aren't you? But have you heard me say how many times that a win rate is completely and totally worthless? It's meaningless. What's the point of a win rate? You tell me. And all of you are going to say to me, but I've got a 60% win rate, then I've got a high probability, I'm going to win all the trades. And yeah, okay. Let's say you win 8 out of 10 trades because you've got an 80% win rate. You're a genius. And you win $20 on 8 trades and you lose $1,000 on the other 2. So tell me, how did your win rate work out? Did it make you profitable? Did it make you a profit? Well, probably not. Because the last thing you thought about was your risk, or managing your risk, or an out, or an escape plan. Your only thought is, what's my win rate? What's my win rate? Have I got a good win rate? How much profit am I gonna make? How much loss are you gonna make? What's your out if your investment goes pear-shaped? What's your escape plan? You know, I likened it, I think, in my live video the other day, or one of my other videos, where I said, you know, if you were in the military and there was a mission that you have to go and accomplish, sometimes my mind just leaves me. You got a mission, right? And you got to go and accomplish this mission. Do you think they go in there with a view to we're only going to win? No, they've got an out. They've got a plan B, or an escape plan, just in case things go wrong. Because who would risk their life and go in there and say, well, what if it doesn't, it's only going to work out? Not even thinking, what if it doesn't work out? What if this happens, or what if that happens? Everybody's got a plan B, except traders. Traders go into the market with this view that we're just going to win, we're just going to trade, and we're just going to win. We're never going to lose any money. We're always going to win. Guys, trading is risky. 80% of traders lose money. Well, 60 to 80% of traders lose money On the higher time frames, the 1 hour, the 4 hour, the day charts, 60 to 80% of traders lose money. And if you don't like risk and you don't like losing money, rather don't trade. And let me tell you something, if you're thinking of trading 5-minute charts and being a day trader because it looks all flashy and fun and, you know, it's exciting, 99% of people lose on day trading on 5-minute charts. It's been proven, it's been tested. In fact, they took pro traders, actual pros, put them in the same room, let them all trade 5-minute charts. And guess what? 99% lost. It's just the way of the world, guys. You might as well go to a casino and play roulette if you're going to trade the 5-minute charts. There are those traders that approach it correctly. And if you use my psychological approach that I'm going to show you after the charts, it might even work for you on the 5-minute charts because you can use the same mentality, and that same mentality might give you the edge that you need to be successful. Let's go and have a look at the charts, and then let's go and take a look at how you can make a profit in the markets. But first, here's the $1 billion trading system, and then we'll go and have a look at the $1 billion trading strategy after we've had a look at the system. Here's the charts, guys. Let's talk about the trading strategy that will make you money. The trading strategy, that $1 billion trading strategy, that will get you to the end and make you profitable. Right now, I'm going to show you the charts. I'm going to show you the high probability system. Trading strategy, I'll get to you straight after the charts. Once we're done with the charts, we'll give you the trading strategy, and then you can take it from there. Now, this is a gold trade that I took, and the strategy that I'm going to show you is going to show you how to run your stop losses, how to take your profits. This is one that's probably not going to work out, but it is going to give me a profit. You know, the trade was taken with a $1,000 stop loss. It went into profit. We were looking for this profit here. We moved the stop loss right up into profit here, and it's probably going to take it out at $244, which is not great because I wanted a $1,500 profit, but we'll make a profit nonetheless on the stop loss because we are in profit. So that's how the trades work, guys. But how do we look at a trade? How do we take a trade? How do we look for a trade? You know, what do we do with these squiggly lines, as we call them? I guess the France 40 is not the best example. What about the euro US dollar? You know, you guys know the euro US dollar well, so let's use that as a good example. So what I'm going to do, I'm going to remove all the old drawings off of it. And what you'll do is you'll come up to the chart. This is what you're going to see. This is a 4-hour chart that we're on. And now you're looking at the 4-hour chart and you're thinking, this is bearish. This is going down. But when you look at price, how do you actually trade it? What's the best way to go about it? So what we do to help us identify our price action is we use support and resistance, or we use some supply and demand, or we use some fair value. But now the main thing is support and resistance because we're looking for liquidity. We're looking for areas in the market where it gets to the top and it says, this is where I always get to, and then I fall down. We're looking for areas where it gets to the bottom and it says, I'm at the bottom now. I've had enough, I've got to go back up. Because there's no such thing as expensive and cheap in the stock market. What's expensive in the stock market is good. What's cheap in the stock market is bad. Because this is not the supermarket mentality that we're getting into here. The supermarket mentality is if it's expensive, you need to sell, or you need to get out, or if it's cheap, you need to buy loads. It doesn't work like Black Friday, guys. This is not Black Friday. This is the stock market. If something's cheap, it's bad. If something's expensive, it's good. It means it's running well. But what we do to get our levels is we take the chart to the day chart. And then once we're on the day chart, now you see I've got all these green and red candles here. The green and red candles just tell me when it's going up, when it's going down, when the sellers are coming in, when the buyers are coming in. That's all it tells me. It tells me the highs and lows. So for me to draw the lines in, I need to take it to a line chart so that I can get the closing prices on a daily basis. Now, what levels am I looking for on this? Now there's an all-time resistance at the top here, which is very, very far away. So you're looking for a closer one, and this is an area where the price likes to get to and say, well, I'm at a high. So we're going to draw this one in because there's a close, there's a close, there's a close, there's a close, there's a close. So we're going to put that down as our resistance. Now I'm going to draw it in as a rectangle because there's no such thing as markets stopping on a line. Markets don't know where the lines are. This is just a general area where buyers and sellers have put their orders. And we know this because every time it gets into this area, it turns around and goes the other way. And the only reason it would turn around and go the other way is because there were orders in place here. That makes it a resistance. It makes it an area of interest, area that other traders are interested in. Remember, I told you the market's made up of buyers and sellers and lots of them. So this is an area that other traders are really, really interested in. That's why you draw it in there. But now you're looking for a bottom, but there isn't a bottom at the moment. So let's just see if we can find another bottom. Ooh, yeah, it's quite far away. Look at that. It's all the way down here. Parity. That's the next bottom, pretty much. Parity right at the bottom down here. So now you've got a bit of a dilemma because the bottom is extremely far away from the price. It could have been here. This is an area where there is some resistance, and you could have had some resistance here. You could have said this is a pretty good bottom, but really what I would do in a situation like this, because this is so low, is I would say, look here. I would say this is an area where there's a lot of interest, okay? So at this point, I'd start getting me old concerned boots out, saying, well, something's happening here. There is an area here, a pattern here, that says this could be a bit of a bottom. But so just to avoid any trading mistakes, what you might want to do is you might want to sort of say, well, just be careful in this area. There might be some movement around where it goes back. But in general, that's your main resistance. That's your main support all the way down here. Could easily break past these levels, but there is a level here that it's busy trying to break through. If you want to, just to be on the safe side, you could draw it in just to be on the safe side and say, well, there is a level here. If it breaks through that, it's solid going down to the next area. So now you've got two support levels. You've got the mid support level. You've got a main support level down here at the bottom, which is saying to you, whew, this is tricky. People are probably going to go for parity, because human beings tend to go for round numbers. That's the general consensus in the market, is human beings like round numbers. So there's a good chance that it will come down and go for this round number down here. Then you take it back to the candles, because candles, what they do for me is they show me. Green candle coming out of support says it's long. Red candle coming out of resistance says I must go short. Keep it simple, guys. You don't need to get overcomplicated about it. There's a green candle coming out of here, but there's an undecided candle before it. There's another undecided candle before that. That makes me undecided as well. I don't know which way it's going to go. But if I get a nice long green candle here, then I'll say, okay, it's breaking structure and I might take the counter trend, okay? But on the day, it's a little bit green. Nothing serious. Nothing to write home about. We're trading on the 4 hours. Go back to the 4-hour chart. Let's see what it shows us on the 4-hour chart. On the 4-hour chart, we do have a green candle here. Does look like it wants to come out and go long. But the candle has to close first, and there's 1 hour and 57 minutes left before that candle closes. You might say, maybe I can take a long trade here. My big concern is the indecision that's lying around here, and there's been a big bearish trend down here, and the structure's not broken. So what you want to do before you jump into any long trades off of a support level is you want to see it break some structure. And the best way to see it break some structure is if it breaks above the last highs over here. So that'll be 105.62. Best way would be to wait for a nice green run breaking these highs. Then you could say, oh, okay, it's breaking structure now. We can take along. Another way to wait for it to break structure is to wait for it to break through the trend, which is way up there. Maybe a bit of a lower trend down here, because that might be an anomaly. Just see if it breaks through there. That'll tell you it's broken some structure. And then you can get into that trade. Simply trading off the support isn't the obvious answer. It's just, it's there. It helps you to know what's going on. You can, if you want, take the counter trade with the green bar going up and go for it. But normally that will work well in a range. This is not in a range. This is in a trend. And the trend is not your friend here because it's to the downside. So you would be trading against the trend, which is actually not what you want to do. You want to trade with the trend. In other words, you want to stay short on this as far as possible. So you would rather take a short out of that level there than a long out of this level here. So when you want to take the long here, make sure you've got a strong green candle pushing up. Then you can say, all right, I'll take that trade, I'll take that long trade. And that's as simple as the charts get, guys. You don't have to overcomplicate it. You don't have to wait for stars to align in the left and the right and all kinds of strange things. You simply look for the red candle coming out of there, go short. Look for the green candle coming out of there, go long. You can look for it on trend resistance and trend support as well. And when you're on the 4-hour chart, when you've dropped down from the day chart and you've got these levels and now you know where your levels are, look for any areas where there might be some supply and demand or anything else that might be giving you a signal that there's another resistance, another support, another supply, another demand within the area. That just gives you a sort of a bit of a sniper entry into the trade, a bit of a, like, I can get into the trade here as well because that's showing me a bit of a picture. So that's what you're looking for. That's as simple as it gets. Nothing complicated, nothing untoward. Now, go and listen to how you're supposed to trade. Go and listen to the $1 billion strategy. Go and listen to the strategy that's actually going to make you profitable in the stock market. Okay, so you've seen the charts. Now you know the system, the high probability trading system, price action, support, resistance, that sort of thing. Easy stuff, not difficult. And you'll go on a course and you'll do that and you'll learn all that and you'll come back and think, I know what I'm doing, I can do this. And you'll get into the market and you'll trade with real money. You'll take real money out of your real bank account and you'll put it into a trading account with a broker. And suddenly you'll take real money and put it into a trade. Now you've just been on a course, so you're quite confident. The minute you click buy or sell, if you've got the guts to do that, because suddenly it's real money, everything changes in your mind. All the fear receptors kick in, everything changes. You'll be amazed at how quickly that changes. Your brain's a funny thing. So now you're watching a trade, your adrenaline's pumping, whether it's going into a win or a loss, the same fear receptors have kicked in and they're driving you insane. If it goes into a loss, you're really going to go into panic. And in fact, you're probably going to add to the trade. You're probably going to try and keep the trade and hold it because you haven't lost yet. You don't want to lose anything. So you certainly don't want to get out of the trade. You want to try and double up on it and dollar cost average, and you want to get back out of this trade in a profit. You don't want to lose that money. You just put it in. Right. But then it goes into a profit. And you had a target out here, but it's got a tiny profit. You think, oh, there's some green. Let me take that money and get out. And off you go. You run. The fear forces you to sell out of the trade. Now, let me ask you guys a question. Before we go into the process, let me ask you guys a question. If you were betting on a horse race and there were, let's say, 5 or 6 horses in the race, your horse was coming first, 100 meters from the finishing line, you've got to bet on the horse. And the bookie says to you, I'll double your bet on that horse right now if you want to. Who would say no? Probably no one. You're 100 meters from the finishing line and you're winning. Your worst case of losing is if the horse suddenly drops over. So you're probably going to win that race. Good bet that. But now your horse is coming 5th. The first horse is 100 meters from the finishing line and you're probably 200 meters from the finishing line. The bookie says to you, I'll double your bet on that one now for a win. There's no one on earth that'll take that bet. I don't know anyone that would be silly enough to actually take that bet. The possibility of all 4 horses in front of you falling over, your horse suddenly getting a rocket up its ass, and you winning this race is near impossible. But yet in trading, so many traders, when they're in a loss, will add to the trade. And they'll dollar cost average and they'll double up. But you're losing. Your trade's losing. Why are you doing that? Yet when you go into a win, you jump out of the race. It's like you're winning. You're 100 meters from the finishing line. The bookie says to you, I'll let you break even if you get out of the race now, okay? Or I'll give you $50 if you jump out the race now. You're like, yeah, sure, I'll take that. You're 100 meters from the finishing line and you take the money and go. That's what you do in trading. Would you do it in a race? No, probably not. Yet you'll do it in trading. What you do is this. Let's get to the crux of the matter, and this is the $1 billion trading strategy. This is the strategy that's going to make you profitable. This is the strategy that's going to make you money in the long run over time. How does it work and what's the strategy? Simple, guys. It's managing your risk and managing it properly and understanding the psychology of the market. First thing you have to understand, is the squiggly lines don't make you money. They just give you a high probability trade. That's all they do. You could win $10, you could win $1,000. There's a high probability trade because what the squiggly lines have showed you is this is what's happened in the past and it'll most likely possibly happen again in the future. That's what you're going for. That's what you're gaming for. Right? Now you've taken that trade, but how do you manage it so that you can actually be profitable? How do you psychologically approach your trading method? Because that's what it's about. At the end of the day, making money or losing money is about you. It's not about the system. Two traders, same room, same system. One will win, one will lose. Simple. It's all about the approach. When you approach the trade, what you have to do is say, I'm prepared to lose 1% of my trading account on every single trade. Which means if you have a $100,000 trading account, you will risk 1% on every trade, which will be $1,000 on every single trade. What this also does for you is if you lose 10 trades in a row, which is really shouldn't happen, but it does happen, and it happened to someone we know the other day. And when that happens, it can be quite psychologically damaging. And as I explained, take a step back, think about what's going wrong in your life. Why is this happening? How am I approaching my trading? What's going wrong? Try and sort it out. Step back, then step back in. So you lose 10 trades in a row. You lose 10% of the account. That's okay. You're still in the game. No, you shouldn't, because the way the market works, it's made up of buyers and sellers. It's a 50-50 game. With 10 trades, you should win 5 and lose 5 at the end of the day. Normally, good case scenario. But to be a 50-50 trader is actually very difficult. To get to that level, and you would think, well, that's crazy. No, to be a 50-50 trader, a proper 50-50 trader, is extremely difficult. And when I say a 50-50 trader, I'm talking about a trader that takes proper profits and takes small losses. Not a trader that scalps and quick takes $10, $10, $10, $10, $10, and then loses $1,000. That's not a proper trader, and then the win rate doesn't make you good at all. Not even close. What you do, you risk 1% per trade, $1,000 per trade on a $100,000 account. Now you're paying $1,000 for that trade. Now you've taken the trade, $1,000 risk. If your trade goes against you and it loses and it takes out that $1,000, do not move the stop loss away. Do not dollar cost average. Just accept the loss. You lost $1,000. Next trade, move on. Forget about that one. Put it behind you. You lost. It happens. Imagine going into a motor race and you're racing a car. You come second. It happens. You can't win them all. Walk away. You lost that one. On to the next one, dude. You might win that one. The point is when you're winning and it goes into a profit, you got $1,000 risk, you should have at least a $2,000 target or at least $1,500 target. Something decent, a bit more than what you're risking to lose, not less. And it goes into a profit. It's $250, $270 in profit. Don't sell out. Don't get out of the trade. That's not your target. You've got to learn to step back and leave it and let it run. Let the trade run. Don't jump out of the trade. If it gets to $600, $700 in profit, then you can take that $1,000 stop loss, move it up to break even and say, well, you know what? Now this trade's free. It's not costing me 1 red cent now. The trade's free. Stop loss is at break even. If it comes back, so be it. Don't look at it as, oh, I'm going to lose that $700 profit. No, don't look at it. You haven't won anything yet. You're just in profit. You know, we call it draw down when we're in a loss. Call it draw up. You're in draw up. You're winning, okay? But you haven't won until you've drawn the money. But you don't want to draw that amount of money because then you're wasting your time. Because why are you in trading? You're in trading to make money. It goes further and it goes above $1,000. Take your break-even stop loss, move it into profit. Not right up behind it, maybe halfway, maybe $500, $600. If it comes back, you make quite a decent profit, so be it. And it gets up to your target, which is $2,000. Move the stop loss right up behind it at $1,900 or something. That way, if it takes it out, you walk away and you say, actually made target, man. It's close enough. If it carries on going up, bonus. You know what one of the worst feelings is? Is when you get out of a trade $300 in profit, you get out early because whatever gut feel told you to. And the trade just keeps on going up, going up, going up. And it probably would have made you $5,000. And you look at that and you think, why did I sell it at $200 profit? Well, am I crazy? That's worse. It's actually a worse feeling than taking a stop loss, to be honest with you. But that's the simplicity of the system, guys. It's a two-step business plan, which you don't even have to write down. I don't see you needing to write a whole book about it. Pretty straightforward, guys. Risk 1% per trade. Make sure you stick to it. And when it goes into profit, put your trades up to break even so you're not losing anything. Bob's your uncle. You'll lose a couple of trades. There'll be a couple of small losses. And somebody asked me the other day, but what if it goes into loss and it hasn't reached your stop loss yet, but you're not happy with the trade? Well, then you get out because then you're not happy with the trade. I call it an invalidation point, not a stop loss. It's a point where I look at the trade and I say, you know what? that trade's no longer valid. If I walked in now, I'd laugh at myself if I took that trade. So why am I in that trade? And when I look at that, then I say, well, then I should really be getting out of this trade. I really shouldn't be in this trade anymore. Wasting my time, no point in it. Sometimes I'll look at it and say, why am I in this trade? But I'll also look at the liquidity and say, well, I am actually just liquidity here. So perhaps I should just wait, because that's all I am, is just liquidity for some buyer or seller. Yeah, that's the basis of the $1 billion trading strategy. That's what's going to make you money. You, not the squiggly lines. It's all about you. It's all about what's inside you, how your head works, and your psychology of trading the market, how you will actually approach your trading, how you will approach the squiggly lines. And that's what will make you money at the end of the day. Have a proper business plan, have a proper psychology, and you'll actually make a profit. Guys, I hope you enjoyed that. I hope it works for you. I'll try and give you a rundown on the markets over the weekend. Let's see how we go. Don't forget to watch the last video. If you want to know more about my systems and more about price action and how to trade, watch the last videos. They're great. They'll help you out. Till the next video, guys, I want to thank you for watching. Cheers, thanks, and bye.